Good morning, everyone. Welcome to the Euro Trade. My name is Mark Stalker D. I've been trading for about 18 years. 12 years out of that, I've been a prop trader. I was one of the first, the first female funded trader at Topstep about 10 years ago. 10 years ago. I cannot believe that. Anyways, I am looking at platinum this morning. I think I was watching Aaron's show. You might have seen me in chat. Aaron is right on gold. It's a little bit messy on the higher time frames, so they're probably waiting for CPI. But at the same time, we may have something developing in platinum right now. So that's going to be on my radar. Now, if that trade that I'm planning in platinum, which should be a failed auction, if we show some weakness around 1345, that will be a failed auction. But if it doesn't work out, then we can sit and chat. I was thinking maybe we can chat about how to journal more efficiently. Because I kind of noticed that when people are journaling, they're not really picking up the more important side of things that might push the skills in the right direction, right? All right, so let's have a look at this platinum trade. Potentially, I'm not in just yet. And yes, I will stay on the combine because it is August. It is very early. I'm still waiting for DAX over here, like waiting for Godot. And hopefully someday we will get that soon. And then we can do some DAX trading. I already did about 2 small DAX trades, so sitting at about 312 on the day in my personal, which is not a massive amount, but it's a nice way to start the day. And then we're going to see if this Euro session can bring us something on the CME products. But like I said, it is August, it is CPI day, so most of the action is probably going to be located later in the day. And that means we have to be a little bit less grasshoppery. That is my term for people who just jump in and out, in and out, in and out, with not much rhyme or reason. Just go with the wave of the emotions and then start just drowning in the ocean of your emotional dysregulation, which is not really what we want. Okay, so what do we got? Platinum is opening above value. I made these 2 rectangles over here. Obviously, I have my own charting software. That's actually my company called Blartech. And at the moment, we only still have products for MetaTrader. We are kind of thinking of bringing the levels somehow into maybe into Discord or something, but I'm still exploring that. The idea here is that we are hitting this GEX2 level at 1350, and we're reacting from it. I also have the London related quantitative extreme up at 1360. So that entire zone, which is obviously massive, is on my cards as an area that might be quite difficult to break. What we're seeing now, whenever the market opens above value, but not like a million ticks away from it, so not like 2%, 1.5%, 5%. Now, if it all opens sort of in the vicinity of the value, it tends to go back and test the value area. Now, what's a value area? It is a distribution curve from previous days trading. You know, the belly that we get whenever the market starts distributing? That's what the value area is. It's nothing more, nothing less. It's just a measure of where yesterday's business spent most of the time. Now, when it opens above value, yes, there's a chance that it goes into a sustained auction. But if it fails around this GEX2, we may have the opening for a failed auction setup. It's sort of like an alternative to the mean reversion, because obviously we're going above that first hour of range. Now, the first hour of range in profile has its own name. It's called the initial balance. We all know that if you've been here for a hot minute. I would like to see the weakness, and then the target, natural target, the high probability target for a failed auction would be the other side of the initial balance. But since the value high is also fairly close there, that's not beyond the realm of possibility that it's just going to go down and test 1330. However, right now, At this point, we're still hanging slightly above the initial balance, so nothing yet, but we do have a pretty sizable selling wick from 1350. I'm looking at a TR, which is a slightly different measure. It's a measure over a certain number of previous periods in the current time frame. That is currently sitting at about 60 ticks. So in order for me to get involved in this, I would like to see the trade maybe retest this GEX2 level, reject again, and then maybe we can do a 60 tick stop loss, maybe a 70 tick, just to make sure that you kind of capture at least one and a half span of the candles that we currently have. And then maybe we'll have that failed auction. Now, if it goes higher, I don't really want it. I'm not really that happy doing the longs into the former Asia high. And if I look at it on the daily chart, to me, this is a little bit bear flaggish. Is that a word? So I would be looking for basically a reversal from this little evening star, aka supply, that we have created. So it's just a higher time frame reference for context, okay? Oh, sorry, my microphone malfunctioned there. Apologies for that. It's still early morning, yes. But yeah, let's have a look at that. What is the crime? Is saying that 1354 is the next area, and that is the Asia high. But if we actually get platinum sustaining above the initial balance, I don't actually see anything much until 1365. And that means if you see a platinum go into a trend, don't go against it, because platinum is a product that will just go into these like mad trending moves, and therefore not the best idea to look for liquidity grabs like you would in something like the equities, right? So equities love to retest the Asia high or low, then they sort of take out the high or the low, and then the volume sort of almost dries up completely, and then you will see that liquidity grab, and like we used to call it stop run and reverse. Now we have some other names for it, but it's literally the same event. It's take out of the Asia high or low, reverse, and then you have usually a little scalp, sometimes even a lot more. But yeah, platinum is not really the product for that, because if we do end up sticking above the initial balance, that to me would mean that anything that we're seeing in the way is likely not going to hold in the long run. And at that point, we'll probably see GEX2 holding pretty well. Yeah, so be careful of platinum and its trending tendencies. But at the same time, it is a CPI day today. So like I said, most of the action might actually be later on in the day. So I'm going to be a bit careful, and I'm going to demand some pretty clear-cut price action activities rather than just trying to front run any trades. And therefore, we're going to stay on a 30 and 15-minute chart so that we don't get chopped up on low time frames, just in case this doesn't move anywhere else. So yeah. What is the crime? Is saying platinum is above the New York Midnight Open. It is, and that also means that I don't use the midnight open. I use the value areas for open sentiment. And it's just worked a lot better for me because it is based from the actual auction activities that have happened rather than, and again, the midnight hanging above midnight, hanging above 50% of any previous session. That is really a strategy for equities. And this is where I kind of have a little bit of a problem with people trying to apply things that normally work on NQ. Then they come to trade something like crude oil and they find themselves getting completely run over by these intraday reversals because it's a commodity, right? And platinum is as well, so is gold. Therefore, some of the playbooks that you would typically be taught by the NQ and ES traders, they just will not hold up because these products, if they're not trending madly, they do have this penchant, and even if they are, they have this nasty habit of just turning around on you and just going completely the opposite way. So you have to be careful whenever you're trading commodities. And it's not like some people go to me when we see that kind of a move, oh, is there news? And I'm like, it's not news, it's just the nature of the product. So we have to know the products that we are getting involved in. And yeah, so anyways, let's see who's in chat to say hi to everyone. Justina saying tuning in before I fix my sleep schedule for D. Thank you. I really, really appreciate it. Thanks for being here. Shay Hughes, we've seen you here nearly every day. It's always good to see you. What is the crime is in here. Paul H. Now, Paul, I told you about the event. I said 6 p.m. It's actually going to be 4 p.m. So if you're still listening, I got the time wrong because we want to do it during the day. That makes sense. Paul knows what I'm talking about. I'm not going to talk about it any longer, but yeah. So obviously Paul H is here. He's driving to a client and listening, so hopefully you heard me. If not, I'll send you an email. Coca88 says, hola Deeyana, hola, hola. ¿Cómo estás? The Sanity World is saying from Miami. By the way, that's all the Spanish I speak. I just want to put that out there. I speak a little bit more of Italian, but Spanish, never really learned it. Even though every time I'm in Florida, it's quite funny because every time I land there, they go start talking Spanish to me, and I'm like, I don't speak Spanish. And then I've had so many women usually turn around and they go, "Could you just speak your language?" And I'm like, it's not my language though. Then they gotta just look at me and go, what? I suppose I look Latina, but I am Serbian, Italian, and Greek. So, yeah. Born and raised in Serbia, though. Now I'm a naturalized British citizen, and I don't really have the active citizenship in Serbia anymore. I've been in London for like 25 years. So, at this point, I've lived in London longer than I have lived in the country that I was born in. So, yeah. The Sanity World is saying, gold, give me profit already. Well, again, if you were watching Aaron had a very, very good point. It's CPI day, so we need to be a little bit more patient. Whenever you have choppity chop, it's always slower price action. So you have to be a little bit more patient with targets. You have to identify the range, and really, I wouldn't be shooting for the extremes of the range for targets. I would be shooting for the middle of the range. So while we wait for this platinum to make up its mind, this is what I mean. So have a look at the 1 hour time frame. Very, very range bound, right? So we have this range established. And yeah, if you got in somewhere near 406, your profit should have really been at this 3,400 level. 3,400 is a danger zone for any kind of reversals, but so far it seems to be just wagging around overnight VWAP. And therefore, to me, this would just be a pure range trade until proven otherwise. Okay. King Allen says, good morning. Good morning, good morning. Razzie Pancake says, you short or long? Hoping they're short. Snipo, good morning, coach. Hope you have a great week. Yeah, I mean, let's have a look at my my little. So the live accounts don't really have analysis yet. So what are we working with here? Let's go full shebang. So yeah, starting to look a little bit better. So July, I told you all that it was a bit patchy. overall up, but a bit patchy. So that's starting to look a lot healthier in the last 1, 2, 3, 4, 5, 6, 7, 8 days. Obviously, I've done some London trades here that are not on my live, but I'm trying to kind of replicate whatever I'm doing on the Combine. Basically, I use the Combine to test the waters, if that makes sense. But my live is now only available for trading for my best times of the day. And if you look at Coach T, oh, no, they've changed it. So basically, it was telling me how my best time of day to trade is from my 12 p.m. to 4 p.m. and that I should focus on that. It's like, yes, I know that. Now it's praising me for the risk reward. But one takeaway is that when you have a quieter period of the day, this is something that should go into your journaling. Have a look at the best times of day. And for me personally, that's actually between 3 and 4 p.m. my time. And that translates to 9 till 10 a.m. Central. So that's Chicago time. And then obviously Eastern would be an hour later, so 10 to 11. And that also makes it much easier for you to focus all of your mental capital just for the couple of hours of the day when your performance is traditionally and historically been solid. Any other time of day, just throw it away, chuck it in the bin, set it on fire, and go and spend the day with your family, your dog, your kids, do other things, have a hobby, come up with a hobby, anything just to keep you away from the screen. I know we all love this, but at the same time, while trading is not gambling, it can definitely lead to gambling behaviors. And that's obviously a problem. Even if you're not, compulsive about any of your other behaviors, for some strange reason, it is money, it is emotions, and it can be incredibly addictive. So we always have to be aware of that. And therefore, knowing your day trading time zones when your, performance is, peachy and you can read the market pretty well, that's the time of day you should focus on. So, for me, DAX for this time of day is by far the best performing product. But obviously, I have to do these streams, so it's a little difficult, especially in August when everything grinds to a halt almost. But at the same time, it has been a huge learning curve for me to find which CME products can actually move during this summer day. And this is how, we're now trading copper, we're trading platinum. Copper has been exceptionally quiet. It kind of still moves, but every time I look at it, I'm like, is my internet on? Is Starlink crashing? What is happening? Because it literally just stays at one price for like, even during regular trading hours. So I'm like, is that thing moving? Hello, poke with a stick, please. Let's have a look at some questions. Amanda wants to know. I like your username. Amanda is a sloth. See, we should be sloths in trading. You should trade less, not more, because more trades does not usually equal more money, except in a very, very tiny sample of traders, and usually coming from institutional backgrounds involving some options. And yeah, it's a different sort of thing. But yeah, Amanda wants to know, just a quick question about slower products. Can the ZW, ZC, hogs, cattle, can they be used to reduce trades taken and avoid grasshoppering? Do you know what? I would actually think that the slower products might make you grasshopper more. At least that's my problem. Because if I'm getting involved in a swing type trade, if it's not moving for like 90 minutes, that's one of my triggers, even I will be tempted to flip the direction because I'm like, maybe it's a breakout and it just hasn't really started moving yet. And then you flip, I call it flipping and flopping. And then you flip and then you realize, no, that was actually the wrong call. My initial idea was correct. So then you close the second trade. So now you're sitting at 2 maybe partial losses. And then you're like, oh God. So really you need to have a product that is still moving, but it's not as bonkers as NQ if you're struggling with like keeping up with it. So this is why I'm here to expose you to some other products that are not as insane, and yet they're still fairly good products that do still have a lot of liquidity, a lot of intraday range, but intra-candle, they're not crazy. So if you look at platinum can have these like teleporting moments, but generally when you're looking at a 30-minute time frame, it's not that often to see a complete reversal long in like the space of 3 nanoseconds. It's just not something that platinum does. But if you are looking at NQ, especially during regular trading hours, it'll be up, down, up, down, up, down, up, 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 and then 3 seconds later, down. And you're like, well, what are we doing here? And it's a 30-minute time frame. Like, it's really, really difficult to actually get it to stay in a 30-minute period committed to the direction that they are sort of trying to tell you. And for me, front-running trades on something like NQ is nearly impossible. And even whenever I trade it usually, if I am going to get involved in it, in and around like just after MOC goes through, so very late in the day. And typically the type of a playbook that I like to do on it is the short squeeze. Love doing that. Now, typically for the short squeeze at the end of the day on NQ, I will hold it past the original close. Okay. Topstep wants us to be flat at 10 past 3, but actually on your private accounts, you can hold that, and also in some other companies, you can actually hold it. Hold on, let me switch off my air conditioning because I think it's causing a bit of a problem. And I'm going to switch off the noise suppression because I think it's causing some issues here. All right, so now if the dogs bark, you're going to be able to hear them, but still. Yeah, where was I? So NQ, MOC, short squeeze, that is usually when I get involved. And if I do that, I will typically just leave it alone and then come back to it, like after about 45 minutes. And usually what tends to happen is that after the close, they will have yet another pretty solid move that they started at the MOC point if it's a short squeeze. But there needs to be certain conditions around it. And for example, if you have the market that keeps falling, but there's positive delta, and then you get into the MOC and they typically shave off half of that positive delta, you will get this turnaround, like it's basically called a delta divergence. When the price is doing one thing, but the delta keeps growing, it means that people who are going short, people who are going long are the shorter time frame traders, like aggressive traders, speculators like you and me. However, they're getting run over, so therefore that it's contributing to the delta, because it's an interesting thing because it's an old pit trade where everything is going the wrong way on delta side, but the price is not really responding to it. So anytime you see overwhelmingly negative or positive delta, but the price is doing the opposite, there's always a chance that at some point the opposite will happen. So that's where short and long squeezes are very, very tasty for playbooks. All right, platinum's still above the initial balance, so nothing for me so far. And again, because we're at a larger time frame daily supply, I'm not really interested in doing longs in here. So yeah. And if I am in an NQ trade, I will typically change the chart to high Kanashi, because I just cannot be looking at the chart that's just like spazzing out on me. I'm way too old for that at this point. So yeah, Amanda, I would probably focus on something that is sane. Maybe after Labor Day, when everything starts picking up, you could look at copper, because copper is a beautifully smooth product. And I love teaching people on copper precisely because when it decides on the direction, you can typically at the very least expect the next options level. But if it's in a trending state, then you can run these trades that run for like 4 or 5 hours, and it just keeps going and going and going and going. And then we get to the end of the day, we get to settlement, which is actually much, much earlier in copper than the electronic close. You can still trade it after, but generally after that, the volume dries up. But however, if you are in a trending day situation on copper, when things are really moving, you can just leave it alone. And you can really see whether your analysis is doing what it's meant to be doing. On NQ, I kind of feel that half of the people who are having problem with consistency, I think it's mainly an emotional dysregulation problem because of the speed of that product. Coach Jay has an amazing saying that learning how to trade on NQ is like learning how to ride a bike on a Formula One track, and then I added to it, and expecting to win the race. So it's not happening. It's not going to happen. It's too quickly. For most of you, your brain processing power is just not there yet. There are certain people like high-level musicians. I was one of them. High-level athletes. You have chefs who are also very good at timing. Doctors, engineers, people who are used to working under an inordinate amount of stress, under high pressure, but still remain cool-headed. Cool like cucumbers in the face of highly stressful situations. They can typically deal with it a little bit better. Why? Because their brain processing power was developed in another area, but it is directly transferable to the speed of thinking required for something like NQ. Okay? Pilots as well. Pilots are very, very good in stressful situations, and they have to be very quick to react when something goes wrong. Those sorts of skills, and somebody comes to me and goes, I trade NQ. I'm not against him trading NQ, but everybody else, you come to me and go, what's your background? And they go, oh, I traded, I traded NQ for 2 years, can't find consistency. What do you do? Outside of trading, I am an accountant. So accountancy is very good with numbers, but they don't need to be super fast. Like nobody's going to ask you to do their taxes in it's not a race, right? It's 3.5 seconds. Do my taxes. No, gun to the head. So it's a different sort of thing. So even something like accounting, even though it's a professional skill, they don't have to necessarily think quickly because things are immediately coming down on their head, right? But doctors, surgeon, pilots, chefs, musicians, athletes, they're very, very quick to turn a bad situation into a good one. That's what you need for NQ. If you don't have that, I would really stick to something slower. So obviously gold is pretty good when it's slower, but gold can also be a little bit of a psycho bunny, right? I would still think that it's smoother. DAX, once we get DAX, and again, if you have your personal accounts as well, DAX could be an excellent, excellent product. It's pretty smooth. Can't go into, very nice movement, but it's not doing the intracandle seizure type activity, which might throw you off. So yeah, but I'm not sure about hogs, cattle, bonds. They are slower. I mean, maybe bonds. Bonds might be an option, especially if you're not looking for a certain amount of ticks. Because for me personally, I can't trade certain products because I want to see at least 70 to 100 ticks of movement before I'm getting involved. And when you look at something like, any bond product, they mostly have about 40 to 50 ticks in a day. That bothers me. I don't know why, but it just does. So for me, it's not, it's not really an option, but it might be an option for you. So try that. Hogs and cattle, I wouldn't call them slow. In fact, I think at certain times of the year, I think they're very quick because I've traded some lean hogs with hoop, and they are not slow during regular trading hours. In fact, I would say they're medium speed. Because when they move, if you don't actually enter as soon as you can see the setup, they're gone. They're just limit down. Trader DZ says, what about the difference between spot and futures and gold? It's killing me recently. Well, I mean, futures, so there's this thing called the basis, right? That is the difference between spot and futures. It's called the basis, right? At certain times, they can actually go into a condition called backwardation. Now, normally futures will be priced higher than spot. And I haven't really looked at spot and gold recently, gold futures recently, and how much of a difference they have. But if it's a backwardation type situation, there are strategies around taking advantage of the backwardation, and then almost like an arbitrage opportunity until those markets get back to normal. Normal being contango, where the futures markets are higher priced than the cash, and that's perfectly normal. So whenever that kind of diverges, but there's also another thing to keep in mind. In contango, any new contract will be even further out. So the closer you get to expiration date, on most months, the more the prices of cash and futures will start to get closer and closer. That is completely normal, right? At the beginning of the contract rollover, especially when gold skips a few months because the delivery requirements of the markets, you will find that there's like a number of months when spot and futures will stay diverged. So is that really an arbitrage opportunity? Probably not. It's just a state of the fact that we rolled into several months forward in futures whilst we're still trading spot price. So you have to know these mechanistic things about the futures, and rather than going, oh my God, it's killing me, the difference between spot and futures. It's normal. So it can't kill you. It has to be a part of your strategy, right? Joe says, I started looking at Hikanashi for NQ just this weekend, bringing over something I have used for years on commodities, helps smooth out the noise. Yeah, absolutely. I don't normally use Hikanashi, but on NQ I absolutely do, because I cannot stand looking at it. I don't know how you guys and girls can actually trade that thing. It's just like cancerous to me, but yeah. So Sniper wants to know, got my 5th payout like 14 days ago. When will they contact me about going to live? Question, is it 5 payouts from the same XFA, or was it 5 payouts from different XFAs? So, you took 1 from one and then you took 2 from the others. So is it the same XFA is my question there. And Bruno's question as well. So let me know, and then we can, yeah. Rox wants to know my favorite pair. I'm not a currency trader. There's no pairs in futures. So my favorite, it will be depending on the time of the year. So sometimes I absolutely adore DAX. Most days I adore DAX. Sometimes I absolutely love copper. We have a love affair when it's moving. Other times I'm completely obsessed with RBOB. So it really, it really depends on what's moving. But I don't marry the products anymore, especially because I've been through crude oil dying on me after 12 years of doing super well, being the main product I traded. I was an energies trader almost exclusively for all of that time. And then we get the election year and crude oil completely dries out. Goes from 350, 400 ticks a day to like barely $1 a day, and then every so often you have a period of volatility, like you have one day. So right now, the only way I'm trading crude oil is via options. I'm not touching it every day. If I do touch it, it will be every couple of weeks. So I'm very aware after 18 years of doing this that marrying one product is probably not the best idea in the long run. If you're just learning, I'm super cool with you just staying on one thing to learn how it lives and breathes. But if you find that, let's say you've been trading for 5 years and suddenly the product that you chose, something happens fundamentally. You either get, quantitative easing or something. Like on equities, that was the time when liquidity sucked, man. It absolutely sucked. It started after the credit crunch. And when I first got into a prop firm in 2013, they put me on ES first so that everybody traded that. It was moving 12 to 20 ticks for the entire 24-hour period. And I was like, why do you people trade this? This is painful. Like, what am I going to get? Like, who? You got 6 ticks. You captured like half of the day's range. Woohoo. No, it's absolutely horrible. And I didn't understand it. And then they introduced QE, and that carried on for many years. It was painful. NQ back then, 75 points for the entire 24-hour period. Compared to now, when you've got bonkers ranges. So, like, even during the summertime, I think NQ is still pretty generously ranged. Let me have a look. Yeah, I mean, it's sitting at over 1,000 ticks per day. So, at the moment, you have summertime, almost 300 ticks, 300 points range versus 75 that I was observing back in the day. Granny D over here. But yeah, so products go through periods of high volatility, low volatility, and really until COVID arrived in 2020, NQ was a snooze fest. It was okay, but it was nowhere near as crazy as it is now. It seems that everybody and their mother has turned into a speculator on NQ. Just look at YouTube. What do you see? NQ, trading NQ, trading NQ, trading. Like, there are other products out there. Like NQ, I don't think it's suitable for 90% of people. I always joke, NQ giveth and NQ taketh. Why? Because consistency on it, unless you are like cool as a cucumber, a very unusual person that has high levels of emotional regulation, very self-aware, you'll have problems. And I tell people, move away from NQ. And how many people in chat is that, I can't, I love it. When it moves, it does give me, that's just dopamine talking. You're like an addict, I really love doing extracurricular activities with certain substances. And then you get them off of it, and they're like, oh my God, I was so sick. Like, what was I doing? And I find people's behaviors very much like addict behaviors. That's why we call it NASCrack, lovingly, right? Because it screws up people's behaviors, lives, bank balances, everything. And Aaron was saying, you get that one payout, and you think, oh my God, here we go. Now my life will be perfect from here on out. And then the next month, you mess everything up, lose all of your accounts. It's not enough, right? If your consistency is not showing you profitability over 3 months, like at the very minimum, if you can't get one payout a month on NQ is not for you. Like I don't want to be the bearer of bad news, but change nothing and nothing changes. Like, do you want to trade NQ and suck at it for the next several years? Maybe forever, never find the consistency because you're always like feeling like you're screaming and with your hair on fire every time you're trading it. Trading is not supposed to feel that way. Trading is supposed to feel relaxing. You're not supposed to stress in a trade. Some people say to me, Dee, how can you stay in a trade for so long? Because I've identified the playbook that I've seen, thousands of times before. And I'm pretty confident in what I'm seeing or not seeing. Like, for example, if something, whenever I'm, just by myself and I'm trading, not talking, not doing production, not doing a whole bunch of other stuff, I will be very relaxed and able to completely kill a trade if it goes immediately against me. Like, immediately against me. Saying, like, for example, if I was looking for a short in platinum and it draws down 35 ticks. I usually use 70 to 80 ticks on it in this environment as a stop loss. If it draws by 35 ticks immediately upon entry, I just kill that. Like I'm gonna save money on the loss. I don't want to necessarily get hit for the full size, full -1R, if I can help it. But generally I trade with less size, slightly wider stops to account, especially now in the summertime environments when liquidity is a little bit sparse. You can get these teleporting moments and all that. But in general, I'm able to just kill the trade at -0.5R if it goes against me immediately. But no, people will completely take, like you will, what I don't get, and here's where I'm completely the opposite to everybody else. I'm a left-handed person. I look at life upside down. Whatever you guys think is normal, I do things in a different way. So people will happily take full stop outs on full size, but they will also take partial profits. So full stop out, and yet you're taking partial profits. Tell me, like, make it make sense. So you're cutting off the profit potential, but you're sticking to your losses. So what? Like, to me, it should be the other way around. If the partial profits are so good, then why not take partial stop outs too? You've seen me do this actually. I sometimes, if I want to trade with more size, but I'm very confident in the setup, I will actually place, let me see if I can illustrate. Let's do a micro gold because I don't really want to derail the profits. So let's say I'm looking at this range trade, but I'm wanting to control my risk a little bit better. So if I enter a three lot trade, so let's just ballpark do like this. I will actually sometimes go, well, if I'm in with 3, I don't actually want a full stop out. So why don't I put a stop partial here? And then let's say that I'm also using a bigger stop loss, right, to account for the market basically doing a liquidity grab and me losing everything. So I will do something like this. Now, I do base these off of both structure and my own maximum adverse excursion, my plus minus a few ticks away from that, because I know that a lot of the times in a certain situation for a certain playbook, I've seen it draw down a certain amount before it turns back in my favor. And I'm okay with a drawdown up to a certain point, especially if it happens slower. But the time to drawdown is what matters to me. It's like if it's an immediate drawdown, that's an immediate close. I'm not going to wait for it. However, if it's kind of wagging around and it sort of goes inside it and comes out, I'm okay to stick through it. Not a problem at all. But if you want to do partial profits, you need to do partial stop outs as well. Otherwise, the math will not work. You're taking full stop outs in partial profits. Why? That's a system design problem. It has nothing to do with levels. It's just pure numbers. So it's like, oh, it's not working. I can't find consistency. Yeah, because you don't want to exit a partial stop out and you don't want to wait for a full profit of at least like 1.5R to make it viable as a system. So, anything over, so let me put this out there. 1.25R multiples. That is the point where if you have a 50% accuracy, so 50% hit rate, that's the point where systems become profitable. They're not terribly stable, but they're a lot more stable than people who are trading with 0.8 R and aiming for like 80% accuracy. Because as soon as that accuracy falls, whether because the market state changes, like everybody goes through drawdowns. But the problem with high accuracy systems is that they are notoriously unstable over time. You put in a bunch of sample sizes and a bunch of chaos into it, different market states. Most of them will not stand the test of time. Therein lies the problem. Most people don't really realize it. They're like, oh, I really love being right. That's great, but do you want to make money or do you want to be right? You know, your choice. YouTuber's screen name wants to know, do you expect the gamma wall to act like a heavy support POC, meaning that if it breaks below and it retests, it should result in a significant move? So there's a couple of things to look at. Right now, I would say the platinum is just going into a trend, so I don't want to touch it. I don't want anything to do with it. If you hold above a significant area, upon a retest, it will actually likely hold, but it will depend how far above that options levels we held. If it's only just like a tiny bit, just like, you know, in Platinum's case, it would probably be 30 to 50 ticks holding above it. Probably not good enough. So it needs to break and hold the structure from Asia. In this case, I would be looking for, just like running through what's happening. I don't want to trade it in this area on the long side. I have no interest in it. If I want to short it, I want to see it all the way 1370, maybe even 1400, and then at that point, I want to become a seller. Again, right? Buying. Again, I would like to have more of these daily ranges available. But if we hold above the Asia high with no discernible selling wicks, and then we retest GEX2, that would be support at that point. So I wouldn't expect it to run through it up and down as if it's not there. Right now, they've kind of ignored it, and they're battling Asia high. So nothing for me to do here. I have no setup for the times when we're breaking Asia high, we have a sustained auction, and we're hitting daily supplies. It's not a good area. Let me just have a look at Snipos. Sniper, I don't see whether your 5 payouts were from... Oh, hold on. No, that was the question. Just trying to go through the chat to find your answer. 5 payout. XFAs combined, a little less than 5K. Okay, but that's not... Yeah. Yeah, so I don't see your answer. Yeah, I don't see your answer. Do I trade news? Texas Red is asking me. No, I trade the aftermath. I do not hold trades into any high-risk releases, because if you're in live and you're trading with size, that doesn't really end well. Right, I'm just going to kill this gold trade because it was just an example. It's not a real trade. So no news trading for me. All of my career, I avoided news trading, and it's also why my methodology aims to look for playbooks that don't particularly require any news. They're just events that happen every day. But I will trade the, like Rips calls it, the afterglow, which is a great name for it. Joe Gendron, CL was my bread and butter too, but since February, I can't really. Yeah, I mean, since last February, man, that's when it died on everybody. Me and Hoop used to trade it a lot back in the day, even when we had Squawk Radio. And when they just started drying up, me and Hoop were like, where are they? Okay, so to clarify some of the processes behind the 5th payout, Sniper asked, 5th payout, but it has to be from the same account. There is no minimum balance for them to move you into live. Like second time around, I literally was moved after barely a month and a half. I don't even think it was the full 2 months. Because obviously they were like, oh yeah, consistency, yeah, cool. And they just moved me. And I think I overall took about 15K out of the XFAs that I had at the time. And it was only like 3 XFAs. It wasn't a lot. And then I was left with, across the board, 19 grand. And that's the balance that got moved into live. So not a lot, right? And I was kind of hoping they're going to let me build it up to about like 70K or something. But consistency, and they were like, no, we're just moving you. So, you know, it's a good thing and a bad thing. You know, I'm not super happy about the daily loss limit being 3K. So therefore, you can't really manage your balance. And I find that a huge challenge, just talking friend to friend, you know, just kind of pouring my soul out. I find it like I'm starting a combine every single day. And to me, it's a huge sort of mental block. So I don't find the live account with a huge shackle very easy to trade. And I, you know, unless the first sort of week or so goes really well, I struggle with it. I really do. Because it's been a while since I've traded with the daily loss limit. And I just got used to, because I'm very good at bailing myself out of holes, because the longer the day goes on, the more I can kind of read what's going on. And so many times my trades towards the end of the day would pull my day out. But I tried sizing up, and literally within like 3 trades, I got to the daily loss limit. So I'm still working on finding ways to size up in a live account with that 3K balance. And so far, I've got to say, I'm struggling to find how to do that unless you trade a really small size and then just behave as if the 3K is not there. So I'm just still trying to work that out. It's definitely a problem. And for some strange reason, when I was younger, I was able to kind of get around that. So was it just me looking for, I don't know, something's changed over the years. So I'm still kind of trying to work out why was I able to trade with a 3K loss limit when I was 32, but I'm having such a big issue. Is it because my expectations of maybe sizing up in the live? I don't know. It's a weird one, guys. It's a weird one. So I'm still trying to work it out. On my live, am I running 2-to-1 kinds of trades? Yeah, at every opportunity, if it's not a super range-bound day, I will try to run 2 or multiple opportunities, which means I'm very selective with what I'm doing. So most of the days on my live, I will do like 1 or 2 trades. It's not very exciting. You know, I'm not like clicking buttons, so I definitely wouldn't be able to be a part of Thunderdome. Although I would like the opportunity to dress up. Oops, I left the stop market buy there. Okay, there we go. Clear all. Yeah, so I'm not a very high frequency trader intraday. I will be, like even on my most active days, I will trade multiple products because everything's moving. But my active days are usually between like 10 and 13 trades. So, you know, it's obviously different than people who are like, oh, I'll try one, oh, I'll try another one, oh, I'll try another one, I'll try another one. I don't do that. I go, I want to be a buyer here, I want to be a seller here, and then I'm going to wait. I will not chase in between. I'm not going to go, oh, it's a breakout, let's go. I won't be doing that. So every time I see people doing that, trying to chase every move as if it's a permanent reversal challenge, doesn't end well. You will run out of equity on it. Even if you trade like one mini, you will run out of equity on the day pretty quickly, especially if it's a new account. So to me, being selective is the job description. You know, it's not about clicking buttons. Now, granted, on the main broadcast, they do want us to be more clicky. But that's also the reason why the segments when I'm on, it's more about education. It's more like I do trade sometimes, but if there's no setup, there's nothing that will push me into a trade. Like no matter how many people are going, yeah, I think this is a great, you think this is a great setup. It's not in my plan. Therefore, I'm not going to trade it. Because I'm not there to appease chat or to appease anyone asking me to trade more. I did not make my career by trading 1 million trades a day. I made my career by being super selective, by sticking to the times of the day that I know work for me, and ending my day if after about 3 to 5 trades I'm not able to make it work. And 3 to 5 trades, usually a couple maybe for London if we have DAX. That doesn't work out. I will then wait for post NY cut, which is after 9 a.m. Central, after 3 p.m. my time. If I still can't make those work, if something is not setting up properly for my style of trading, I will then, my final, redemption for the day would be the last 90 minutes, either for NYMEX or for COMEX or the MOC in equities. And if that doesn't pull my day back up, that is it. But usually all of that is maximum 10 to 13 trades, maximum. And that's not the same product. So I have products for each part of the day. And that is how I made my career. I didn't make it by sitting down and smashing 1 million Asia trades on Euro futures. Because Euro doesn't normally move for Asia. So doing that, you're just chopping yourself up for no good reason. So my problems, what I'm dealing with as a trader, are kind of vastly different than a newbie trader. I have no problem being selective. I have no problems not trading on the day. Even though most days I would find a trade, sometimes it will be one and done. Sometimes I find one copper trade that goes for 4R multiples. Do I then spend the rest of my day going, oh, I need to trade more. Give me the fix. Need more trades. Like, you don't need more trades. If you've made your money for the day, call it a day, make an executive decision to end your day and enjoy those profits. You go, yay, 4R multiples. This is amazing. It was an outlier day. I caught a huge trending move. This is beautiful. And then you go about your day stress-free. This is where the lockout button can work if you can't do that naturally. But if I've made 4R multiples on the day in one trade, I ain't sitting there to trade for the rest of the day. Like, you're mad, So I like to spend time with my dogs. I like to spend time with my husband. I like to, if I'm feeling well, I like to do some cooking. We like to, maybe a barbecue or something. We like to sit outside the fire pit that we now bought. Because before, I couldn't do a fire pit. My garden in London was too small. Here, we bought a solar stove. Now, every time I say that, because I told Hogan, he's got one as well. So I said to him, I got a smokeless fire pit. And he goes, is it a solar stove? And now every time I say solar stove, I have Hogan's voice in my head. Is it a solar stove? So, yeah. Anyways, yeah, don't be so married to this life. If you want to learn, if you want to journal, you want to watch videos about, how to make your methodology better and more robust. Yeah, spend time doing that. Don't spend time actively wasting your mental capital on subpar setups. It is not going to work for you. You're going to burn out quickly. You're certainly not going to get to, 20 years on looking sprightly. You're going to look weathered, burnt out. You're going to be sick of trading. You're going to probably be heading for some kind of a stroke. You don't want that. You want trading to be an addition to your life, not a burden, if that makes sense. And if you're making it a burden, you're doing something wrong. 100%. 100%. If your life depends on 8 hours to 10 hours, maybe even 12 hours of watching the markets and getting, stressed, trading is fun. It's not supposed to be stressful. It's supposed to be fun. But fun only comes once knowledge is there and once experience is there. I'm not going to say you're not going to go down through drawdown periods, because you will. Do they get stressful? Yes and no. It's like it depends whether you understand what was the cause of the drawdown. Like, do you understand why you got yourself into drawdown? Was it your mental side of things? So was it psychology? Was it the market volatility that either kicked up or dried up? What was the cause of a drawdown? Was it you grasshoppering and smashing 1 million trades in a day, that's all mental side. But once you sort that part out, trading doesn't matter what's going on. Drawdown, smashing it, I still love it. Like, I really couldn't care less that if I'm going through a drawdown, I'm like, oh, ouch, it's a drawdown. No, it's just a period when you need to size down and just wait it out without blowing up completely. And in many ways, it's like a discipline endurance thing. Not that discipline is difficult for me, because it isn't, but it's just like, okay, it's a drawdown, bit annoying, but it's not, life ending. It's just like, let's wait and see how long this slowness is going to carry on. Or if it's volatility offers opportunity. I much prefer to have Trump tariffs smashing the markets left, right, and center, because I love high volatility times and I excel in them. COVID was one of my best years trading. Tariffs, it's what got me back into the live account, so I thrive in environments where my targets are reached quicker, where my setups either work immediately or not, and smoother price action because they decide where to go and they just keep going. I love those, absolutely love those. So I don't find those times stressful. I'm like a kid in a candy store. I'm like, yay, when is he going to be talking next? And I mean, I know that tariffs were sort of seen as almost like a black swanish event, but for me, they were beautiful. They were like, yeah, let's push copper like 1 million ticks per day. Why not? It's amazing. Paul H says he got the message. Awesome. Good to hear that. Do you have an idea how to trade indices? Yeah, same playbooks that I use elsewhere. It's all always the same methodology, same levels, same ADR, same ASR, same initial balance, same GEX levels, same calls and puts from the options chain, same with the value area, open sentiment. It's always the same. It's just that I don't like equities. It's a personal choice for the RTH. I like DAX in the morning. In fact, these shows were initially created because we were going to bring DAX, and then they had a bit of a bottleneck with it. So here we are a year on. Still no DAX, but I'm hopeful that it will come, especially now that they're creating a brokerage. You should be able to just pay for Eurex and get it. But they definitely need to sort out the dashboard, which runs in USD, whereas Eurex products are in euros per tick rather than USD per tick, and that is causing them some trouble. Now that they've just hired, like, I don't know whether you saw MP's message, but they hired a whole bunch of people from like big tech companies. That is going to push things along fast, right? So I'm still hopeful that this new addition to Topstep development team is going to be extremely competent. And yes, we're having some growing pains, but please bear with us, because every time you're changing technologies to that degree, there's always growing pains, and there's always going to be bugs, and there's always going to be issues. But I just want to remind you that Topstep was always there to innovate, and that no matter how many people are having issues now, eventually Topstep will set a new standard. I have zero doubt in that, because I've seen Topstep grow over the last 10 years, and they always have excellent ideas that others follow. Now, granted, we have a whole industry of prop firms now, but at the same time, while there are others who are innovating as well, Topstep remains the pioneer in the business. And just to let everybody know, back in the day, every firm that made everything, that had any sort of a larger capital to them, they always had one platform that they would push on you. Do you think that going to, any other firm, like let's put like big firms like Jane Street, and they only hire quants, but Jane Street, do you think you can get into Jane Street and just go, do you have Ninja? Do you have Quantower? They'll just go, this is our platform. You work on this platform. And you would be not going, oh, but I'm really used to Ninja. Oh, I'm really used to, like, you wouldn't be able to say that. Why? Because it's Jane Street. And it's like, yeah, of course they're going to have their own thing. Now, I get that TopstepX, Project X, it's a white label trade, but it's not really white label TradingView. Like, to a degree, it's TradingView charts. Everything that they're doing on top of it is actually theirs. Like, these risk tools that they have, like all of the stuff that you see here, lockout risk settings. Do you think that's TradingView? It's not. It's actually TopstepX, Project X. All of the stuff that we're requesting, simple contract limits. Do you think that comes with the white label TradingView? No, it doesn't. I can tell you now, it doesn't. So all of this stuff is TopstepX. And with the risk tools, nobody can deny that they are bringing a new standard for what should be risk controls for prop firms. Mark my words, just you wait. Give it 3 to 6 months, maybe a year. All of the other firms will start creating their own risk tools. Mark my words, okay? And I know that people are like, oh yeah, just Topstep furniture. But I've seen, the reason why I'm here is because I've seen how innovative Topstep can be, how MP can innovate. And I have zero doubt that this will work. Because he's already created something that is completely changing the way prop firms should be looked at on the risk side, risk control side. So you can agree or disagree, but time will tell. Time will tell. So yeah. Anyways, let's carry on. But yeah, please stay patient whilst we're in this another period of growth and trying to make payouts a little bit less painful and faster and more efficient for everybody. There will be growing pains. It's just how technology is. Moving the amount of people that Topstep has it's quite a project. It's like almost like big data, right? Moving inordinate amounts of users and stuff to the new platform. There will be, troubles along the way, but they will get there. So yeah. Somebody's complimenting my breasts. I didn't realize they were on display. Stop looking at my boobs, man. What the hell? Pete Trader says to only allow their own platform is a big mistake. I disagree. I think it's a good thing because they can innovate more and put their efforts into one thing rather than a million platforms that they were supporting before. And somebody once told me on Twitter, what sort of infrastructure, what sort of support do you think they were doing on the back end? Obviously not being a part of any kind of prop trading infrastructure before, just spewing out random comments that makes no sense. So I was like, oh, so you think that running like 7 to 8 different offerings of platform and running infrastructure and support tickets and any issues with the data feed that might result, that's no work at all. Okay. They went really silent after that. So I was like, cool. Yeah. VT says, once I started trading TopstepX, I'm hating all other platforms and losing if I trade with them. Yeah, because Topstep has risk controls. And I know that Ninja and TraderRate on live accounts, they have a way to kind of set your loss limit. But to actually get sophisticated tools, you always have to pay for the third-party risk tools. And they're not cheap. They're not cheap. There is one for Ninja that I have, but I had to pay for it. You know, I had to pay for it. It wasn't like, oh, you sign up for $49, Combine, and you get all of the sophisticated risk tools. It's not like that. What is the indicator, the call that shows London ASR high and low and NY? The indicator that I'm using to drag that out is my indicator called BlockTechDR, but it's not available on TopstepX for now. I have it on my old charting platform that I have used for 13, 14, 15 years. And unfortunately, it is MetaTrader 5 on AMP futures. I keep it there because A, I'm old school. B, back in the day when we were creating our indicators, MetaTrader was by far the biggest platform for retail traders. Obviously, times have changed. But the lines that you see are the lines that D does, and the lines that Dee effectively does every single morning before she comes on here. So contrary to popular belief, I do not spend more than about 5-10 minutes putting my face on. Then I spend about 20 to 30 minutes dragging these levels from my different platforms into TopstepX. As soon as they have a way for us to create custom objects, right now on the API side, you can only push orders. So you can make OCOs, you can put like order routing based on the strategies you create, but you cannot create and plot objects. As soon as they allow that, we're going to jump on it, and you're going to have Blatek levels. But in the meantime, I'm actually considering starting some kind of a Discord query bot, so it won't be anything to do with coaching that I do. That will not move. I am not a huge fan of Discord, I've got to be honest. But Discord has a way to connect these bots and to drag out levels. So maybe that could be a workaround while we work on our indicators for other offerings, other platforms. Our indicators are pretty sophisticated. They have a lot of stuff going on. We created them in 2015, and we've had multiple updates throughout the years, multiple additions to them. So just figuring all of the things out of how we can now translate to other languages is going to take time, and it's been taking time. But the ADR, the Blatek DR indicator, it could be one of the slightly less complex ones. Because, with something like supply and demand that scores the levels just like a human does, that has so many things in there. Like, we looked at it and we were like, what is this supposed to do again? And so many lines of code. What to do? How is gold looking? Gold is looking very flat, flatter than Kate Moss's chest, as I like to say. So, I don't know. I don't think it's going to move much before CPI. So, yeah. Paul H. says Topstep is a business. They're looking after their future by looking after their traders. The speed of innovation here is amazing. Keep it up, Team Topstep. Thank you, Paul. It's very, very kind. Then he goes, my typing skill, however, is anything but amazing. Your typing skill is fine. We all do typos. Yeah. Ash ICT says, dear lady, is it not too much indicators? For you, I'm pretty sure it is. But for me, I'm a data-driven person. And for me, each one of these data points carries a certain situational awareness. But if it's too much for you, hey, it's not your method, right? So if it works for you, you do you, man. But, So, yeah. This is actually all very simple and logical. So you might think there's it's too many lines, but really these lines, so this one, that one, and that one, that's one set of data. It's not 4 different points of data. It's the same data. It's a quantitative extreme, one for the London session that we're in now, and another one for the overall 24-hour range. These two also are part of the same concept. They're not a different concept. It's profile. One tells me the distribution curve from yesterday. The other one tells me the auction type in real time. Okay? And the final one, some options levels. The biggest ones. Not every single option level, but the ones with the biggest open interest. Why? Because now, across the board, between sort of 35 and 63% of all intraday flows are options related. So if you're not looking at that, you're missing a piece of the puzzle. That's only been in force for the last, I would say, about 3 years. Since about post-COVID times, everybody started trading options, and now in equities, 63% of options activity and volume, especially in something like SPY, is coming from the retail side. For the first time ever in the history of markets, retail open interest volume on options has surpassed by a little bit institutional volume. Could be a disaster waiting to happen. But again, if you're not looking at it and you're not aware of them, you're definitely missing a piece of the puzzle. But for you, I think that ICT, seeing your thingy, is an extraordinarily overcomplicated nonsense that I cannot believe that something like as simple as a single print, either as a support or a fade, he's calling it FVG, and then if it's to the opposite side, oh, it's an inverse FVG. It's a bloody single print. Or, PD array. Why call it an array? You're not coding anything. Like PD array of what? You don't have arrays. Do you know what arrays are? No? Look it up on Google. Like, why are we calling that an array? To make it look fancy? Make it sound fancy? Oh, 1040 macro, or whatever, 940 macro. It's a failed auction potential. Like, why are we renaming crap that has existed since 1985 with these fancy tools and, SMT and SSMT? And it's like, well, liquidity grab. So stop running in reverse, man. Just keep it simple. So to me, the way I trade is actually really simple compared to all the ICT jargon and meta language that they've created. But hey, it's free. It's on YouTube, and he has identified structure. I'll give him that. But why connect such extraordinarily complex terms to it? And then, ICT traders come in here and go, I think you've got too many indicators. Oh, and you don't think you've got too many names for the bloody playbooks that are really simplistic, but you're calling them this and that and that and that. And then stealing stuff from Linda Rashke like turtle soup and all that. I just, I get very passionate about certain things, and then the audacity of an ICT trader coming here and telling me that I trade in a complex way. It's like, dude, yeah, get off your cloud. No. Aaron doesn't trade ICT. Aaron uses a concept of liquidity grabs, but it's a stop run and reverts. Aaron is not an ICT trader. Aaron uses pure price action and structure. He doesn't call, liquidity grabs and this and macro and that and PD array, SMT. Like, he's literally looking at the structure, and he's very good at it. He doesn't need fancy names for his setups. He's like, yeah, we've gone through the low here. Are we going to hold below it or come back inside it? It's like, it's pure price action. I like the way Aaron looks at the markets. We're different styles. He looks for smaller chunks of the market. But yeah, Aaron is not ICT. I don't know where the hell you got that from. Yeah, ICT teacher doesn't even trade. Look, he doesn't have to. When we talk about ICT, he doesn't have to trade. He doesn't have to trade. I can tell that he can see the market in a particular way. And I am not going to knock the fact that he set structure in place for a lot of traders who had no structure in their trading. So from that point of view, full prop, man. Full 100% prop. The problem that I have is all the mad stories about the MIBs and about him being the algorithm. That is the part where I'm like, okay. Well, can I say that I got abducted by Grogu in the middle of the night and I got given the secret of the universe? Like, would that be sane to you people? Would you actually believe me? And yet for some reason, people believe that. Markets have existed for 300 years. So unless ICT is some kind of a vampire that was alive back then, I don't see how he can be the algorithm. Like, we've gone to the algorithmic trading to automate certain things that the manual traders have been doing. Like, for example, market making is largely automated these days via HFTs. And they have made it so that market making human way is obsolete now. Like, you can't fight the HFTs. You just can't. But for me to claim that this is why I joke, like, I'm joking always whenever I have a gardener in doing my lawn, where it's like really loud in the background. I always say, guys, the helicopters are here, MIBs, they're here to take me. Because I joke, I don't think that's necessarily useful for trading. It's like claiming that somebody abducted you in the middle of the night. Like, were you doing something dodgy? It's like, oh, I was making too much money, therefore they like just stop. Stop. Like, I can't believe that people fall for that. Like, do you not have like two bits of your two brain cells to figure out that's just a marketing ploy? And if it's not a marketing ploy, there are deeper issues there, you know? However, again, let me reiterate, from the point of view of setting structure for traders who had no structure, I fully respect what he has done. Okay? Is it the best way? Bit over too complicated for me, you know. If you think I'm doing anything complex, like, I don't know, I just don't get it. Like, ICT traders coming to me and going, "Dude, what you're doing is way too complex." Is it? I don't know. Yeah. So yeah, it just makes me laugh. It just makes me, you know, it's very amusing, but I personally can't sit through the ramblings of like a 4-hour thing where he goes off on one and then rants and then tells people how here's another thing. He's against prop firms, right? So he tells people, just put your own $2,000 in the account. Do you know how much money is $2,000? And the fact that people with $2,000 to spare will actually do exactly the same thing that they do in their prop accounts that they pay $49 for. They will lose them in a flash, like blink of an eye, literally. So what? What is the better way? Spending $49, making all of your mistakes, having spent $49, and then realizing that maybe your method needs some work, or spending $2,000 of your own money, which ICT kindly tells everybody to do because it's a better choice since you don't have any rules, and blowing that up. Because for most people, you will make mistakes. You will make mistakes. Why not make them at the least cost possible, whilst you also learn that you can't be just gung-ho, quick draw McDraw, whatever it's not, a quick draw McGraw type start trader, and then be consistently profitable. Like, it's never happened in the history of trading. Everybody's journey is you try, you make mistakes, you make a dent, maybe blow up, you come back, you learn, you improve it, you keep improving until there is consistency. There is no other way. So why not absorb or offset and mitigate the losses that you're bound to make? As he kindly put it to people, oh yeah, just put your own money in. And then when the $2,000 is done, then what? And, you know, him being a wealthy individual, he would go, well, just put another $2,000 in. Hey, $2,000, $4,000, $10,000. It's a lot of money for a lot of people. Again, not being realistic and not being in touch. It's kind of like Rishi Sunak telling people how, you know, if you don't know who Rishi Sunak is, he was our prime minister. I don't know whether he still is, probably not. But yeah, he told people how he's trying, like, just to give you an overview who Rishi Sunak is, comes from a very wealthy background and is married to a woman who's a granddaughter of a guy who owned Infosys. So she's a billionaire, and he married into it. So he tried to be all down with the people, right? So he stood up and he goes, no, you know, I've known hardships. When we were growing up, you know, we didn't even have Sky TV. And I'm like, dude, people don't have, like, bread and, you know, basic groceries to eat when they're properly poor and struggling. And your major struggle in life whilst you were growing up is not having Sky TV. So to me, you know, extraordinarily wealthy individuals telling normal people, and, you know, I'm arguably not the best choice either. I come from a fairly well-off background, and I've never really struggled with money, I've got to be honest. However, I've seen some of my school friends whilst we were going through the wars in the former Yugoslavia. You know, my dad still had a very successful business. He was a rock star, you know, hardly a regular upbringing, and I was aware of that. But then I didn't quite realize the extent of people's struggles when I went to a friend's house, and we were all in sort of music school, music college. So I went into her house, and we were supposed to go to school together. So I just got in there, and her mom goes, hey, do you have, like, do we have any kind of coins in the house? And I was like, coins in the house? What the hell? What do you need coins for? And they were basically scrambling to get enough money to buy one loaf of bread. One loaf of bread. And I was like, oh, why don't you have bread? Like, rich, entitled kid going, why don't you have bread? And she's like, it's a difficult month. We ran out of money. So we're just trying to scrape together from like the change to like see if we can get some bread and maybe some milk if we find enough. And they were just scrambling, trying to find. Somehow they got it. And then we went down to the shops and she just bought that one loaf of bread. And I was like, wow, that's different. I didn't realize. And, you really kind of get how privileged some of us really are. And I never took anything for granted from that point on. I was 13 at that point. And before then, yeah, I was a bit of a, entitled little brat. Sure, I worked for my money because my dad didn't want me to get things just on a silver platter. So he actually had a rule that if I want, like, for example, I was a musician and I wanted a new saxophone. He said to me, okay, that's great. Go and earn it. That's how I started gigging at 14 because I wanted a new instrument. And my dad said, no, you go and earn it. Now, we're talking a father who was extremely successful. That really set me up for success more than him giving it to me and dragging me by the hand and buying it for me. And that's where my work ethics comes from these days. If he hadn't done that, and if he hadn't, said no to some of my point a finger and get, I would probably be a very different person now, where I would expect everything to fall on a silver platter. But I know that certain parts in life require a lot of hard work. But I've always gravitated towards like my own businesses. I was always like an entrepreneur, so I was very different. But, we need to set some realistic expectations whenever we talk to traders who are maybe not coming from affluent backgrounds. And that's why I kind of have a problem with certain people who are like, hey, just do that. Like, as if everybody has a couple million just under their mattress to spend on stupid things in life and new ventures. And that is how extraordinary wealthy individuals look at things. Is there a way to get there? Yes, but you probably have to do stuff that 97% of people are not willing to do. In trading, that directly translates to do not grasshopper. Don't do what everybody else is doing. Aiming for high accuracy and aiming to feel good. Your feelings cannot be hurt. Now, F the feelings, okay? If your feelings are hurt because you lost a trade, just learn to be okay with it. Now, that's not an affluent thing. That's like literally sucking it up and going, I'm not going to be right every single time. But I recognize that having 1.3R, 1.5, 2R multiples, looking for opportunities and staying patient is something that 97% of traders are not doing. What is the result? 90% of people in this industry lose money. How do you not lose money? Don't do what everybody else is doing. It's like, is it hard? Yes, it's bloody hard. But be proud that you achieved something. Be proud. If you manage to stop yourself from going into a trade right after you lost one, you're already doing better than most traders. So don't be pining over lost trades. Pat yourself on the back and glorify and celebrate the fact that you did not enter a trade again by grasshoppering in because you want to recover the money. That is the parts that you have to celebrate as a trader, not the, oh yeah, I kind of grasshoppered a lot and I somehow ended up digging myself out of a massive hole that I shouldn't have been in the first place. So different kind of goals, right? You're celebrating control over your psychology, not the outcome of one random trade. And then you do that over and over a month, 2 months, 3 months. Guess what? You will start to see positive results. Positive results. Why? Because you stop doing stupid things and you're no longer trying to recover the money. You're focusing on the process and your self-awareness. Nothing else. There is no holy grail here. There is just self-awareness about your own emotions, not allowing the wave of emotional dysregulation to take you under, but instead being a big boy or a big girl, not throwing your toys out of a pram every time you lose a trade, owning up to it and going, yes, I was wrong, but now I'm going to be more selective. Let me have a look at data. Let me have a look at whether this time of day that I'm trying to trade right now, even though I don't really normally trade it, somebody trading Asia, losing a whole bunch of money in Asia. Do you normally trade Asia? No. Why the hell were you trading Asia? Because I had a bad day yesterday. What do you say to that? That's trading P&L, right? That is what you need to banish from your behaviors. And it doesn't have to be a burden. It can be a celebration of self-discipline. So why not do that? Why not? Why flog yourself for losing a trade and not celebrating the fact that you stopped on the day? How's that for a measurable goal? Drop Trade says, I hoard pennies. I'm the reason they have to mint pennies every year. Which band was my dad in? So he was in a band in former Yugoslavia from 1977 all the way till 1990. And they were sort of a folk rock parody band. So they had comedy sketches. Unless you were in former Yugoslavia, you wouldn't have known. And especially not if you're maybe a younger person, although many people still know who he was. He was in a band called, direct translation, Rockers from Morava. Morava is a river in the southern Serbia. So their whole gig was about making fun of sort of redneck types and making a blend, a pretty cool blend between the folk music, Serbian folk music, and rock and roll songs. And they would sing with an accent of Southerners. They would, so it was a former Yugoslavia band. They were, in Serbian, the Rockeri Smoravu was the name. And I can show you how ridiculous they were. They always used to wear silly things. They come up as the first thing. So here they are. So this is my dad, the little dude with curly hair and glasses. That's him as well. And here he is. Guitar and one of the front people. They kind of look like him, I think, a little bit. Unfortunately, the fourth member died in 1982 in a car accident. So that was a huge thing. I was only 2 years old, so I don't really remember him. But yeah, 3 of them continued. And then these 2 guys continued with kind of like a show, but people didn't really resonate with that. And all of their songs and stuff. It's very, very kind of regional with rock and roll. So they were like blending Elvis guitars with like stilly lyrics on top. And so here we go. They're even on Wikipedia. There you go. Rockers from Morava was a Yugoslav and Serbian band active from 1977 to 1991. My dad actually left them in 1989. They kind of tried doing things after, but again, it wasn't as successful. Their music was a mix of Serbian folk music with rock element and folksy satirical lyrics in the village dialects of Šumadija and Morava Valley, combined with numerous cultural references. Their visual trademark was šajkača, which is like a hat, and opanci, which is like the traditional shoes, worn either with traditional dress or in crazy combinations with tuxedos, fur coats, and A-shirts. So yeah. So that was my dad. Yeah. We lost him in January 2022. So yeah, he was 75 years old. So yeah, after that he went on to do a bunch of businesses. So he was pretty successful. Bit of trouble from 1993 to 1994 when the wars were happening. But yeah, I've had an unusual upbringing for sure. So yeah, that was my dad, in case you wanted to know. Yeah, very high quality musicians. Even though the whole side of rockers was whimsical and satirical, for that time period, they were like groundbreaking. They were adding like disco beats, and nobody has ever heard of disco. It was like 1977, and they're doing like Four to the Floor sort of thing with funny lyrics on top. So they were widely successful. Even though Yugoslavia wasn't like the biggest country, they actually sold over 20 million records. So I was born into all of that. My sister was born in 1970. I was born into it. So it was all a little bit unusual and crazy, and so I had to learn to be very strong very early on because people were always looking at us, and there was jealousy. There was like weird behaviors from school children. But yeah, so I had a weird childhood. It was a good childhood, don't get me wrong, but I kind of saw my dad more on TV than at home because he was always touring, for better or worse, right? All right, DAX is going into a sustained auction. We'll see whether whether this liquidation potential is still there. But we do have a pretty clean bill until we hit the demand at 23,870. So that could be a stopping point. Yeah. Rejection from supply and a continuation. So that matches the longer term time frame. But yeah, DAX looking interesting today. Everything else a bit meh, to be honest. A bit meh. And look at that platinum. Went absolutely nowhere. It pushed a little bit higher up. Went sideways. It's a good thing we didn't do any trades. Again, selectivity over, quality over quantity. Especially if you don't need to be on TV and trading and clicking buttons and stuff. You have all of the luxury of sitting there, setting your alerts, and just waiting it out. So I'm going to leave you with that for today. I will see you again tomorrow. Thank you so much for spending time with me. And yeah, we'll see you tomorrow for another Euro trade session. This was Euro Trade on TopstepTV. I'm Marcus Stalker D. I will see you very soon. Have a lovely trading day and watch out for CPI. Please don't trade into it, okay? Please do yourself a favor. Trade the aftermath. Wait for at least 2 minutes. At least 2 minutes. Keep your fingers off the trigger, Anyways, that's all I have. Have a very, very good day. And I will see you tomorrow. Take care.